Hello everyone, this is Stavros Tousios, market expert in FXPRIMUS, and this is a glimpse on the non-farm payroll report ahead of tomorrow's release. Total employment increased by 313k in February, while unemployment held firm at 4.1% for the fifth running month. Economists had expected a peak to 205k, a tad higher than January's 200k, but to everyone's surprise, the NFP reinforced a positive momentum for the US economy. Yet, action in the currency markets was not impressive as wage growth grew with a slower pace. With a 42-month record high on added jobs and 3 consecutive upward revisions of the jobs number, Fed's decision to raise interest rates last month was fairly justifiable. Wages and inflation boost amid low unemployment supported an economic expansion in January and February, but this did not reflect on the US dollar. Instead, forex rates fell in March as President Trump's tariffs weighed in. April started somewhat better for the dollar despite an initial decline on escalating tensions between US and China, as Trump reaffirmed markets that negotiations are welcomed. Now, looking at tomorrow's data. US change in non-farm payrolls is expected to be 190k in March, down from 205 expected in February. Most importantly, economists expect the unemployment rate to decline to 4%, a figure not seen since December 2000. The employment situation for March is scheduled to be released on Friday, April 6, 2018 at 12:30 p.m. GMT. As a trader, you could look into the US and EU interest rate differentials to pick the right pair before positioning yourself for this month's NFP. With Fed hiking interest rates from 1.5 to 1.75%, Powell's first hike, the spread moved into the dollar's favor. Markets do expect another 2 rate hikes for 2018 or even 3. However, remain tuned to Powell's words as sensitivity to a tariff Fed plays a key factor for directional activity. Despite most traders think the euro-dollar or dollar-yen are the best pairs to trade, Swiss franc thinks differently, as differential gap is 2.5% compared to 1.75 on euro or 1.85 on yen. Of course, euro-dollar and dollar-yen are still very good options as most volumes traded are there. In addition, you could look into the ISM manufacturing and non-manufacturing employment components of the actual reports. The ISM Manufacturing Employment Index registered 57.3%, a decrease of 4% from February reading of 59.7, while the ISM Non-Manufacturing Employment Index increased to 56.60 just yesterday, despite probably owed to strong new orders on Trump's metal tariffs panic buying. Both reports account for more than 2/3 of the US's economic activity. Last but not least, don't forget to check on oil prices. Oil prices are a major input to the US economy and have a direct impact on inflation. Oil prices corrected below $60 per barrel last month, while the core CPI fell at 0.2 as expected. Without necessarily this being bad news, the recent pickup near $66 per barrel is likely to challenge Fed as a stroke inflation will require tighter policy. Thank you for watching.